So it's
Yeah.
important to not have to have something other than a digital currency that you'll be able to rely on, use, spend, trade, barter, what have you. Uh, just understand that with gold and silver, they cannot bankrupt. And the problem today is the world is going through a bankruptcy.
Yeah.
And when all is said and done, we're going to look back and say, holy cow, governments went bankrupt and took the value of currencies with the bankruptcy of the governments. So the
Yeah.
whole theory behind gold and silver, they're the only monies on the planet that cannot bankrupt in a bankrupting world.
With a keen eye on market dynamics, BillHolter has been a vocal advocate for understanding the role of gold and silver as essential assets in uncertain economic times. In this video, Holter highlights gold and silver's unique qualities as currencies that cannot go bankrupt, making them vital assets during economic turmoil and government instability. In the United States, the amount of fiat currency in circulation has increased by over 100% since 2008. This has led to a significant decline in the purchasing power of the US dollar. The purchasing power of gold has historically been much more stable than the purchasing power of fiat currencies. Physical gold and silver are one of the most preferred ways to protect wealth on the long term. As physical gold and silver are outperforming any currency on the long run, they are one of the best solutions to safely transfer wealth to the next generation. During the interview, Holter strongly believes in China's substantial gold reserves and emphasizes gold's critical role in inspiring currency confidence. China added to its gold reserves for an 8th consecutive month, with economic and geopolitical risks as well as a desire to move away from the US dollar driving the purchases. The Chinese central bank accumulated 1,448 tons of gold between 2002 and 2019, and then suddenly went silent until it resumed reporting in November 2022. There has always been speculation that China holds far more gold than it officially reveals. As Jim Rickards pointed out on Mises Daily back in 2015, many people speculate that China keeps several thousand tons of gold off the books in a separate entity called the State Administration for Foreign Exchange, SAFE. However, Holter expresses doubts about the accuracy of such claims and suggests that the true amount of gold held by the U.S. might be different from the official figures. Over the last few decades, the national debt has grown from around $370 million in 1970 to an all-time high of $31.4 trillion in 2023, recently sparking the debate in Congress to increase the debt ceiling to avoid a potential default. When a government accumulates a significant amount of debt, it may resort to measures such as printing more money or increasing government spending, potentially leading to inflationary pressures. In such situations, investors may turn to gold as a hedge against inflation. We will now bring you clips of BillHolter from his recent interview with the Market Sniper. Before we proceed further in this video, please make sure to subscribe our channel and click the bell icon to stay updated.
It's important to understand that gold and silver, because they are direct competitors to fiat, direct competitors to the dollar, their prices have been suppressed for 30, 40 years.
Yeah.
Through derivatives. Before that, they were suppressed, I guess psychologically, whatever you want to call it. The point I'm trying to make is once we get to a place where asset prices clear, the increase in purchasing power of gold and silver are going to be far greater than 99.9% of the people out there have even dreamed of. And I'm going to tell you, any projection that you've seen for the price of gold or the price of silver is going to be too low. There's no question China has far more gold than what they officially say. I mean, I could have 5 years ago, I could have shown you on the back of a napkin that China had over 25,000 tons. Just look at what they imported year after year, plus the 400 tons per year that they mine that does not leave the country. I mean, they are the biggest holder of gold in the world. No ifs, ands, or buts about it. And we talked about currency being backed but not convertible. That's the equivalent of the woman who walks into the ballroom with this big, gigantic, beautiful necklace. Everybody looks at it and adores it. And that's what happens with currencies. Countries, individuals, again, we're talking about confidence. and he who has the gold makes the rules. And if it, if they all of a sudden come forth and say, look, here's how much gold we have, show us how much gold you have, and then the Western nations, don't have even close to what they've accumulated. I did this math. I'm thinking it was maybe 4 or 5 years ago when the U.S. Debt was 23 trillion. I did the math, and if you took the amount of gold that the U.S. claims that we have, the 8,300 tons, and you divided it into the debt at the time, gold would have to be $125,000 per ounce to pay off our national debt. So here we are, the debt now is what, 50% higher. So now you're talking of a number, a couple $100,000 per ounce, and that's assuming we actually have the gold. And I wouldn't assume that.
The dollar's share of foreign exchange reserves has also dropped. That trend was accelerated after the West froze Russia's $330 billion in reserves last year for its Ukraine invasion, prompting other nations to decrease their reliance on the U.S. currency. Meanwhile, the dollar has started to lose to gold, as foreign central banks have bought the commodity in record volumes over the past few quarters. The yellow metal now compromises 15% of total assets, versus the dollar's 44%. Holter also predicts the inclusion of hard assets as currency backing and offers insights into the timeline and model BRICS nations might adopt, considering the use of digital currency for control mechanisms. At the core of the upcoming BRICS summit lies the proposal for a gold-backed digital currency that offers an alternative means of conducting global trade and accumulating reserves. By pegging the currency to gold and other commodities, such as rare earth elements, BRICS aims to enhance financial autonomy and reduce dependence on the US dollar. Meanwhile, Holter's prediction suggests that the financial system is dangerously close to a severe implosion, leading to the collapse of paper-based asset values. Let's get back to interview.
Well, whether it's this event or further events, the de-dollarization process, without a doubt, has already started. Now, the only reports that I've seen where they're going to announce a currency, a gold-backed currency, came from RT. It's not been confirmed by China. It's not been confirmed by Russia. It came from RT News. And you do have to admit, RT has been a better news source than any of the mainstream media. Now, that said, my guess is they will talk about a currency. They may or may not mention gold. I believe they will mention commodities, in other words, hard assets, as backing for the currency. And what I think is going to happen is what happened with the euro originally. If you remember back before the year 2000, the euro was strictly a digital currency. It was used for trade settlement and only used between nations. In 3 or 4, I can't remember. But then they actually came out with currency notes, and all of the countries switched all of their local currencies into euros, and thus it began. And I think that's the model probably that the BRICS are going to use. Initially, it will just be a digital currency used between nations strictly to settle trade. And at a later date, it could be a year from now, it could be 5 years, could be 7 or 10 years from now, there will be BRICS, a BRICS currency that's used in the streets. Now, whether that's digital or paper, I don't know. I suspect they're going to want to do digital too, because they're governments and they want to control the people just like the Western governments do. And at this point, the financial system is running headfirst into a brick wall. And when I say headfirst into a brick wall, because they've raised interest rates, the debt service, and just look at the U.S. Treasury. The U.S. Treasury now is approaching $1 trillion a year in debt service. Where do they get that $1 trillion a year from? Especially during bad times if tax revenues are declining. So they're going to have a system that's up and running, and you have a system that looks like it's running directly into a financial implosion where literally everything paper is worth nothing. And that leads to the last thing, it leads to confidence. Now, yes, an implosion, you're going to have some people say to the government, please save me. And then, you're going to have other people that are self-sufficient and have a clue as to what has happened. They're going to say, piss on you. So this is not going to be as easy or as simple to put a digital currency in place because, I mean, think about the heartland of America. Do you really believe that they're going to take and use digital currency or their phones for every transaction? I don't think so.
As the BRICS summit approaches, the proposal for a gold-backed digital currency gains traction, aiming to provide an alternative means for global trade and reserve accumulation. Amidst concerns of a potential financial implosion and depreciating paper-based assets, the demand for gold and silver as secure wealth stores is expected to surge. Amidst economic challenges and currency instability, how do you plan to use gold and silver in your financial strategy to safeguard your wealth long-term? Share your thoughts in comments section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.